Hey everyone, if you're a Canadian investor looking at US real estate and you're wondering how does the tax and legal structure work so you don't get double taxed and make a bunch of mistakes on the front end, this video is exactly for you. I'm going to walk you through the 3 mistakes multiple Canadian investors have made, the solution, and where you can find that solution. And I promise you this is the best one you're going to find. Stay tuned. In the next 10 minutes, I'm going to give you the CRA tax warning, and there is literature about this. And specifically, I'm going to tell you how Canadians legally own US real estate without getting taxed twice or losing any sleep in the process, okay? The biggest 3 problems Canadians make right here. Check it out. They buy personally in their personal name, which means no liability protection and very messy cross-border tax situations where you're likely going to get taxed twice, once in the US and once in Canada. Using an LLC, very problematic under Canadian law because Canadian law does not recognize the US LLC. And using a regular Canadian accountant who has never done cross-border real estate and watching a bunch of silly YouTube videos that have no reference and successful investors who've done it before. Any and all of these can result in double taxation and a real disaster for your investment, okay? There's a proven Canadian structure. I'm going to show it to you right now. Here is the solution. The LP, limited partner structure, acts as a flow-through for tax, and the key word being flow-through. Let me show you exactly what I mean here, okay? The LP structure, this is what you set up in the US, the limited partner structure. The income flows through the partner. It's not taxed at the entity level. So the actual LP, the corporation, is not taxed. It is taxed at the individual level. Canada gives you a foreign tax credit for any and all US tax paid, and you only pay tax once. Okay? As a limited partner, your personal assets are protected. Only your investment that's held in the corporation is at risk. A corporate general partner provides the full liability shield. That's what you want, folks. In summary, you buy a US property, it's held under the LP, the income flows through the corporation, it's taxed only on the individual level. If there's any tax paid, you pay whatever you do, pay at the US level. Whatever you've paid at the US level becomes a credit on the Canadian side. So you're only paying tax once, never twice. You're just paying your fair share to both the US and Canada. Unfortunately, Canada has higher taxes. Don't shoot the messenger for that. That's not my fault, okay? And this is scalable. Very important. Whether you buy 1, 2, 5, 10, or 50 properties, you set this system up one time. One time. It works for 1 or 50 or 100 properties. For those who like pictures, I'm going to show it to you in a diagram so there's absolutely no confusion. Take a look. You are the Canadian investor. You sit right at the top. On the Canadian side, you'll have a Canadian corporation, but specifically a general partner corporation, which creates a partnership with the US limited partnership. So the Canadian partner creates a partnership with the US limited partnership, and the US limited partnership, as you can see right here, holds the property. Okay? US limited partnership holds the property. The US company partners with the Canadian corporation, specifically the general partner for liability shield, and you as a Canadian investor sit on top of that. This is exactly what creates the full protection of the liability shield, your personal assets not affected, and this is the full pass-through for taxes on the Canadian side, so you are not taxed twice. I'm already going to see it in the comments and in calls and text messages. But Paul, my accountant said do an LLC. My accountant said do an S corporation. My accountant said this. My accountant said that. It doesn't work. Here's why. Everyone loves LLCs in the US. I think LLCs are great, but I'm not American. And if you're Canadian and you want the best tax situation, either become American. And if you're not going to become American, then don't use an LLC because Canada and the US treats LLCs very, very differently. It doesn't mean the same thing in Canada, which is why you can't use them. Okay. As a Canadian, it creates more exposure, or it's assumed you have no structure at all. So be careful what kind of videos you're watching. If they're meant for Americans, you have to be American. And if you're going to be Canadian and want to stay Canadian, then you can't use the LLC if you want to have one tax bill. Okay. S corporation pass-through election is unavailable to non-US residents. Not an option at all. Buying personally, you can do it, but there is no liability protection, and it's very messy on both sides for tax time. No path to scaling, no protection for liability, the worst options when it comes to your US tax bill. Look, I'm not against creating wealth. I want you to create wealth, but for most Canadians, this is not going to be a problem. US estate taxes only applies if your worldwide estate exceeds 11.2 million, and that's in today's dollars, US dollars. Okay, the Canada-US tax treaty provides a unified tax credit that mirrors this exemption for Canadians. For most investors, this is not something that should stop you. The LP structure addresses this cleanly if your portfolio ever reaches that level. Okay, this is something to worry about when you're well advanced into your investing career. With the LP structure I'm describing, this doesn't cause an issue, so don't worry about it. This next section, we have experienced US Canadian accountants who set this structure up all the time, every week. They can do it professionally, and when you're coming through us, they do it at a vastly, vastly reduced cost. So you're not paying thousands and thousands of dollars, US dollars, to set this up properly. They do it for a very, very reasonable cost, usually under $3,000 US, which is fantastic in comparison to most. Okay. I can't share it here in this video. You have to be a client of ours. This one I have to hold back for privacy reasons and to respect our loyal clients. So if you want to become a client of ours, make sure you sign up for at least for our newsletter below, book a call with us, and I'm going to tell you about the property tour we're doing next. Look, we're doing property tour in Detroit. Of all places, Detroit. If you don't know anything about Detroit, this is not the video for it. There are other videos in my channel explaining why exactly we're targeting Detroit. There are fantastic reasons. We've had multiple buyers get in there and they're securing cash flow at amazing purchase prices, somewhere in the 120 to 150 range for single family homes that are totally renovated and ready to go. Cash flows in the $300 to $500 a month in US dollars. Financing taken care of, structure handled, management handled, turnkey properties. It is an absolute no-brainer. Check it out. If you want to sign up for the tour, make sure you're going to my website. Make sure you're at least on our newsletter somewhere, and we're going to announce the details and how to sign up. The next one's going to be May 31st.